Howdy, Jacob here. Today we're looking at Campbell Soup Company. Campbell's Chicken Noodle Possibility. 14.7 billion in market cap, 20.3 billion enterprise value. Sure, people know what they do. I think they definitely have a dominance in the market when it comes to so many things. They remind me of like a Pepsi or a Coke, where they just own, more so Pepsi, I guess. They just own so many products that, I mean, there are a lot of competition within those products, but they definitely have one of the better and more dominating products where they compete in. So 19.8 PE. I don't know if I'd say that's cheap. I'd say that they definitely have a dominance, like I said, but I don't think the growth is nearly there. They pay a dividend that is well over 50% of their earnings per share. So we'll see what that is in relation to free cash flow. From a return on invested capital standpoint, the last 4 years do look to be averaging double digits. So that's a positive sign. Balance sheet shows 189 million cash on hand, 178 million short-term debt, but 4.5 billion long-term debt. That 4.5 billion in relation to free cash flow is, let's say they produce 900 mil a year, which maybe is a little bit generous, but that's about 5 times their 5-year average free cash flow. And their use of cash, pretty heavy on the dividend. They're looking at about 50% payout there. Debt reduction, a little bit to that, but also debt reissuance. When they make big acquisitions, they also issue debt for that. And then a little bit of share repurchases, essentially just offsetting stock-based compensation in the last couple of years. Let's start making our assumptions here. On the revenue growth side, I think they can definitely grow with inflation, 3%. Maybe some of their products aren't in as much demand. People are maybe going towards the Great Value or the Good and Father, the Kirkland brands instead of these products, but they're able to make some acquisitions. So I do think 3% seems reasonable. I think they do still have some sort of dominance, but I don't think it's nearly enough to give them a premium. So I'm just going to go market average on the P and price to free cash flow. I like that free cash flow is consistently higher for the most part. Let's do 10, 11% on margins with a share change of just offsetting stock-based compensation. Dividend payout of 50% currently. They haven't really increased it recently, so I'll keep it where it's at. And we're saying the company's stock price needs to fall 41% before you get the return we're looking for here. So for me, I do think that there is some type of moat in Campbell Soup Company, but to me, it's just not so cheap that I think it's an obvious price at this point. I do hope you enjoy the video and have a great rest of your day. Thank you.